Dr. Reddy's Laboratories is in focus as the company signed a non-binding agreement with Kenomix, which is for an anti-malarial drug. Cyient climbs more than 1.5%. That's after 14.5% equity in Cyient DLM, worth almost 900 crore rupees, changes hands at 766 rupees a share. Cyient itself is likely to have sold the stake via a block deal. Genus Power climbs nearly 5% after the company gets 3 letters of award worth about 3,600 crore rupees to design, install and supply smart prepaid meters. Nucleus Software rallies for the second straight day, this after the company announced buyback plans earlier this week. The stock up around 5%. You have India Mart and Chambal Fertilizers both up by about 1% and 3% each. That's largely on account of their exit from F&O ban. Good morning, you're watching us here on Chartbusters. I'm Manglam Malu. Joining me shortly will be Nigel D'Souza. Just keep an eye out on the markets, though. It's been a steady start for the frontline indices. The Nifty's moved towards the high point of trade, and this despite the weakness that we're seeing on the Nifty Bank itself. The Nifty Bank, after having done well in yesterday's trading session, having crossed the 20-day moving average, has come in for a wee bit of profit-taking once again, currently sitting at the cut of almost 220 points, a cut of almost 0.5%. The broader markets, no real problems. We have nearly 2.5 stocks advancing for every stock which is declining on the National Stock Exchange. So those advanced decline lines come up for you. For the third day running, they have been parallel with the green line much above that red line itself. What are the stocks which are supporting the Nifty in absence of the Nifty Bank today? The biggest of them all has to be Reliance. Reliance has been the key supporter in today's trading session so far. It's been a bit of a breakout at the high point of trade for that stock. The second one we're looking at is ITC. ITC too has moved higher and has moved to the high point of trade itself. So it's the FMCG pack, a couple of these oil and gas names, including the likes of Reliance, and no further sell-off that we've seen in the IT space, which has led to this up move on the Nifty despite the weakness that we're seeing on the Nifty Bank itself. So the IT index, yes, it is down, but it's not out, as a result of which we are seeing that support. Let's welcome Sony Patnaik of JM Financial Services for a quick technical check on the market. Sony, we've been in this consolidating funk, so to say, with an upside bias every once in a while where we do break out. It's typically the Nifty Bank which determines whether we break out or not. What are your thoughts on the indices right now and your individual stocks?
Good morning, Mangalam, Nigel. Thank you for having me on the show. I think, yes, rightly you've pointed out, Nifty, it is looking, or definitely it's holding a very strong support of 24,600, 24,550. On the higher side, we feel that Nifty can test 24,850 from current levels. So maybe another 80 to 100 points more from current levels. That will be quite crucial to watch if it's able to cross above that 850 resistance and, it can head towards 25,000 mark or not. So I think that's the structure for Nifty from current levels. Bank Nifty, you've quite rightly pointed out, the breakout yesterday, we saw it happened above 51,000. Of course, it did not sustain. So I think that level is still holding quite crucial for Bank Nifty, and a breakout only above 51,000, maybe 51,050 or maybe 51,100 in cash levels will confirm that Bank Nifty is also giving you that range breakout. So I think out of both the indices, Nifty is holding quite stronger. Bank Nifty, a bit of an underperformance. Let's wait for the levels to cross. Then only we can say that above that breakout, we can see high levels of 51,500.
No trade zone on the Nifty Bank and maybe a bit of a long bias on the Nifty with 80-point upside. Is that correct?
Yes, absolutely right.
All right. And individual stocks, what are you looking for? Because, there are a bunch of stocks which are doing quite well this morning despite the consolidation that we're seeing in the market. Case in point, from the F&O pack itself, Berger Paints has moved higher, moved to the high point of trade. Delta Corp has moved higher. Glenmark Pharma, we're seeing decent traction on a bunch of these stocks. Strides Pharma, for instance, for the second day running, has done well as well. So actually yesterday saw a bit of profit taking, but right now has moved, bounced back once again. So individual stocks, what's on your list?
Definitely, I think Mangalam, you've highlighted it well. Pharma stocks are looking quite strong for the momentum. Beats and Pharma, Dr. Reddy's, Lalpath Lab and Alchem. But right now, the stock that is looking quite attractive would be Lalpath Labs. It's continuing quite strong in that momentum. The upside is still intact, and it has given a fresh option chain breakout above 3300 level. So at current levels of 3315 futures, one can buy Lalpath Lab, keeping a stop loss of 3310 and a target of 3420, 3450 can be seen in Lalpath Labs. The second stock would be in Escorts. There's a bit of a conditional buy in Escort. Escort is bouncing back from good support of 37, 37.20. If it's able to cross the level of 38.20, it will give you that option chain breakout above which a sharp short covering move can be seen in Escort towards 3900, 3940. So one can keep a watch in Escort, and a buy above 38.20 will trigger the short covering for targets of 3900, keeping a stop loss of 37.20.
Have you looked at some of these cash stocks? PNB Housing Finance, for instance, after the last trade has moved higher. It's up around 8%. Just Style is the other one, which is surging up around 8%. We've been talking about the innerwear space and how demand is increasing out there. Yesterday, we had the management of Dollar Industries and Rupa. Lux is one of those stocks which has seen a consistent rally. In fact, this year itself, Lux is up around 83% odd. Castrol is the other one, which is up 7.5% too. So there are a bunch of stocks which are buzzing around the non-cash, rather non-F&O related stocks, cash stocks. Do you have any picks in that? Any chart that looks good?
Certainly, I think PNB Housing Finance is something that was looking quite good even in the morning charts. This breakout has come quite clearly. It is back with very strong volumes. The breakout on charts has come above 850. So from current levels, one can still enter, reinitiate the longs, keep a stop loss of 845 in cash. The stock can test higher levels of 910, 920. So I think above that, you'll see a fresh round of a breakout again on charts. The extended targets above that will continue towards 940 plus. I think the stock is quite attractive. Very strong volumes, chart, fresh breakout, 850 acting as a good support. So I think definitely one can reinitiate the longs in PNB Housing.
All right, take that point. Thank you, Shilpa, for joining in and giving us, Sony for joining in and giving us all those calls on individual stocks as well as the index. Just before we move on, pull up the intraday chart of Nykaa. You'd see that stock having done fairly well as well. The results weren't too bad. In fact, they did showcase some sort of improvement in their beauty and personal care vertical. The stock at the high point of trade. Let's get you some ideas for profit coming in from our colleagues at Money Control Pro. Bharat Jinani joins in with a stock that he's been tracking.
Senco Gold Limited. The company posted mixed Q1 results. Revenue growth moderated to single digits owing to lower wedding dates, election cycle, and increase in the gold prices. However, the EBITDA margins improved by 250 basis points YOY. This is mainly owing to the low base of the corresponding quarter last year. Steep reduction in the customs duty on gold witnessed in the Union Budget last month has led to a significant surge in the jewelry demand. The company has witnessed strong demand in Tier 2 cities and towns where it primarily operates and has seen increase in the footfalls. Despite a relatively softer Q1, the company has retained its growth guidance of 18 to 20% for the current fiscal. However, there is going to be a near-term impact on the margin due to inventory loss post-reduction in the gold prices announced in the Union Budget. However, the step is positive in the long term as it reduces the pricing differential between organized and unorganized segment, thereby benefiting organized players like Senco Gold. Mandatory hallmarking regulations which require purity certification for jewelry is another regulatory positive for the jewelry industry and will benefit players like Senco Gold. At the current market price, the stock is trading at a PE of 30 times FY26 earnings projections. Investors can add this strongly. Thank you.
All right, with that, we'll simply do a short break. Come back on the other side. There's an exclusive conversation lined up for you from the sidelines of the Motilal Oswal conference. The CFO of Ambuja Cements, Mr. Baheti, joins in with Nigel, who is with the management out there at the conference.
This is again like a quarter which will be dull.
Yeah.
But post September, we are also expecting a good volume plus price.
Correct.
It has to prevail. Otherwise, the way performances are going,
Yeah.
right from
I can hear you
to
perfectly.
to
Perfectly.
Dalmia to
Mic check. assets that you all have acquired also, volumes will start coming out. You know, Penna 1-2 million tons, 2 million tons. You will at least take it up to 5 million tons. FY26. Yes. Brilliant. Excellent, excellent. हाँ थोड़ा लूज करो यार. Otherwise I'll be looking like a laddu. Just amazing.
You work very closely with him.
At my start of my career, I've lent on to him sometimes for very small things. Means, you know, sir, can you help me with this, that, and all. Abhi to, when I think back, I was like, yeah, such a big
So
boss.
Lata, Senthil, Udyan were the three say key pillars.
Yeah, Udyan was the main face.
main face.
Senthil was.
Welcome back. You're watching us here on Chartbusters. Let's toss across to my co-anchor Nigel, who is currently at the sidelines of the Motilal Oswal conference. With him is a special guest, a special conversation lined up for you. Take it away, Nigel.
Well, thanks a lot for that, Manglam. Indeed, a very, very special guest. We have with us Mr. Vinod Baheti, the CFO of Ambuja Cements. Thanks a lot, Mr. Baheti, for finally speaking to us here at CNBC-TV18. Well, before we get company specific, let's talk about the industry. The last few days, there has been this buzz that finally we're seeing some kind of cement price hikes. From an industry perspective, it's a little bit confusing, right? Because in the monsoons, we don't normally see a price hike. But has there been a price hike? And by when do you expect this price recovery to actually take place? Because that's been fading away in the last few months.
No, thank you, Nigel, having me on the show. So, of course, industry is in a very exciting phase, and we have seen lots of good consolidation happening here. First, on the volume part, Nigel, we are seeing a good volume uptick now, and June quarter was a little dull given the rains and given the election seasons and all, but we are now seeing a good volume uptick. Coming to the price part, it is still on the modest journey, but we see that coming quarters from September past, we will see a good improvement on price as well. Industry is overall in a good momentum. Price will be driven by the market factors, but of course the market factors are looking positive from September onwards.
All right, but in the last 5-6 days or so, we have heard that particularly in South and East India, there's been an attempt to push prices by around 10 to around 20 rupees. Can you confirm that, and how much of that will get absorbed?
Their industry keeps doing those attempts as of now, but we haven't seen any material improvement over there. So when you try for 10 or 15 rupees, you may get say 20-30% improvement over there. But the real, as I said, momentum will come post September, hopefully so.
Okay, all right. So you're optimistic on pricing, but what you said is that volumes are picking up, which is encouraging. What kind of industry growth are you working with, you know, for the coming fiscal? And given the kind of volume push that you all are seeing as a group, how much can you outpace the industry growth?
So in terms of the fiscal, let us say we will discuss about the balance part of the fiscal. The balance part of the fiscal, I believe that it should grow between 7 to 8% kind of thing. So far as Ambuja is concerned, I strongly believe we should be closing more than 8%. So we will be that way outpacing the industry. So far as if I look at the larger horizon, say next 5 years or 10 years, this industry I strongly believe should be growing above 8 or 9%. The two important drivers of the industry, both say infra and the real estate. So real estate almost is 60-65%, infra is 20-25%, rest is commercial. These major industry drivers are in a very good phase of expansions.
Okay.
And on top of it, industry is also getting younger.
Yes.
Like if you see, for example, industry is going to put another 200 million tons of capacity. As of now, we are, as an India level, say almost 600 million tons. And this 200 will make the industry much younger. Industry is becoming more cost conscious, ESG conscious. So the industry is getting younger. So I always say that now this is like a 100-year-old industry getting younger in this next coming decade. So you will see a good momentum.
Indeed. On capacity, y'all are around 89 million tons odd, and you've drawn up that roadmap that by 2028 you go to around 140 million tons odd. What kind of industry capacity would you like to have? I think you're currently mid-teens, and you'll have been talking about 20% odd. Tell us the outlook.
Yeah. So as of now, our market share is overall around say 12 to 14%, and we will be moving to 20%. And if I see an interesting situation here, that we are the ones with an expansion of our capacity to 140 million tons, we will have an improved market share compared to others who are also expanding, but they will be retaining their market share. So when I look at say from 14 to 20%, I have a 6% improvement in terms of my market share at 140 million tons capacity.
Got it. Since you're talking about growth and about capacity addition, what about Penna Cement? That came out of nowhere. You went ahead, you acquired an asset that people speculated was on the block for years, but you'll manage to close that out. Now, how do you see the ramp up of this asset? Because utilization levels were low. You had, it was not making too much of money. So, say in the next 2 years, how do you see this asset ramping up?
So, in fact, Nigel, Penna has been a great acquisition for us. As you know that we announced on 13th of June, and we achieved the closing on 16th of August, almost like in say 10 weeks time. And as we speak, already productions have started and dispatches have already started. The assets are great. And while we did a thorough DD, but when we are actually now live running the plants, we see that the assets quality are really good.
Okay.
Our marketing and sales people have given us a commitment of almost achieving 8 lakhs volume per month, which is almost like 9.6 million tons. But without giving much optimism over there, I am strongly believing that 60 to 70% we will be achieving capacity utilization in this year. And as I said, that next year we should be hitting almost 80%. Penna, as of now, we have 10 million tons, and under construction is the Krishnapatnam GU, which will add another 2 million tons.
Okay.
And then the Marwad integrated unit, which is now the whole capex cycle for both these projects. Penna was struggling on those financings, but now with Ambuja's strength, this should be achieved much earlier than expected closing. So we should be hitting 14 million tons for Penna, another say 12 to 15 months time.
Okay, so 60-70% utilization levels in this year
itself,
and 80% next year.
Absolutely.
When does the EBITDA per ton try to catch up with what you're doing as of now?
So in good times, Penna used to achieve EBITDA of 700 rupees a ton.
But that was a long time ago.
That was, let us say, 2.5 or 3 years back.
Yes.
And with the strength of investment, because we see some areas of improvement, like in form of say WHRS or the AFR or the debalancing in terms of the overall capacities and all. So we see that this 700, which was say 3 years back, we should be first achieving that, because in last say 2 years they have been achieving less than say 400 rupees a ton.
Yes.
So we should be first hitting that 700 rupees a ton, and then we should be getting closer to 1,000 to 1,200 rupees a ton. And then that we should be achieving in say almost in 26, 27 kind of thing. And then our desired levels of 1,500 with the power of investment. So we are already working on green power coming to Penna and so on and so forth. And the sea logistics, for example, we will be able to optimize given the ports and overall say synergies what we have in the group.
Yeah.
So I think we should be hitting 1,500 our desired levels. We have anyways given by 2028, that is the overall say EBITDA we want to achieve.
Yeah.
But the first level is to achieve 700 rupees a ton, and then followed by 1,000 rupees a ton.
Got it. And there's cost saving you're working with is around 500 rupees, I think, for the next few years, right? For the entire group.
For the entire group, in fact.
500.
We are looking at almost like 550 rupees a ton.
For it to save it. Got it.
Yeah.
All right. A couple of quick questions before we let you go, Mr. Baheti. Now you have 3 assets, right? 3 cement assets, which are listed. ACC, Ambuja as well as Sanghi. When do all of them come together? First, let's focus on the merger between ACC and Ambuja. And is it on the cards sometime soon, say in the next fiscal?
Nigel, like I think so. Like whatever when it will be there, we will make it to the markets. But as of now, no such plans. But of course, we have already started our journey of consolidation.
Okay.
The first one was the cement business of Adani Enterprise, which is Adani Cementation Industries Limited, which is under the merger process of with Ambuja.
Got it.
But as and when we follow the other steps, we will definitely inform.
Because the street is wondering why do have 3 listed entities, right? Sanghi should get folded up in one of them, and these 2 as well should come up.
Yes.
In the next 2 to 3 years, do you think that will be the plan, that we'll have one listed company, Adani Cement? Should that be a possibility?
Ideally, that should be the way forward. But right now, with Penna also on the fold, so the whole focus is to optimize the businesses.
Yeah.
Our idea is to hit the volumes and hit the EBITDA. That is the foremost priority.
Okay.
But this corporate restructuring definitely will be also worked upon.
Within 3 years?
Nigel, apologies. But I don't want to put any comments on that. It will be speculative.
All right. You've answered a fair bit of our questions, Mr. Baheti. So let's clear the air on everything. There is this rumor or this buzz that the promoter entity, after increasing stake in the company, that's Adani, they could be looking at going ahead and maybe selling some stake. There is some buzz in the market, so I wanted you to clear the air on that. Either ACC or Ambuja. Ambuja is where the buzz is, that there is potentially a large block. You want to deny it? You want to confirm it? Is that a possibility?
Well, I would not comment anything on that because that will be directly looked upon by the family office. So at the business level, at Ambuja, ACC and Sanghi level, I would be able to answer all your questions.
So I should not take that as a denial or a confirmation.
I would say that I'm not aware of it, and there would be appropriate people to answer that.
Well, Mr. Baheti, before we let you go, final question. Inorganic growth is something everyone is looking at and talking about. Few assets that I'll name, you can deny it point blank if you're not interested. Orient Cement?
I will just generally answer you, Nigel.
Orient, Nuvoco and Heidelberg. Three assets.
I would be open to all the assets.
Yeah.
We have always said that we are working on many opportunities. But as we always say, we are a buyer at a right price. And as a strategy, both organic and inorganic, we are open to. And good thing is our balance sheet is very strong.
Yeah.
And sitting on a good pile of treasury to consume a transaction.
But Mr. Baheti, give us some more insight. Is it going to be, could you give us geographically what will be the preferred location?
Okay, in terms of geography, see, we are fairly well balanced.
Yes.
But when these are like known in the investor publications, whatever we do,
Central
India is something which we are like 8 or 10%. So like obviously that would be my choice to look at say Central India to improve that. South was somewhere we were lagging and we bought Penna and we increased our capacity share over there also. So as of now, but having said that, all regions, right from eastern to northeast to center, we are open to at a right price.
All right, Mr. Baheti, thanks a lot for speaking to us here on CNBC-TV18. We wish you well and we'll hold you to those numbers the next time we chat as well.
I look forward to.
That's it from us here at the conference, Mangalam. Back to you.
All right, incredible conversation out there, Nigel. When they're talking about trying to put all the Adani cement companies under one basket itself, not speaking much about when they will try to restructure, but the eventual strategic roadmap is lined out. Also looking for some assets, while in all geographies of the country, a particular focus in the central part of the country with the right price as well. They do have the balance sheet for the same. Let's see how that pans out. Take a short break, more stock on the other side. Welcome back. You're watching us here on Chartbusters. There's been some bit of further sell-off on the Nifty Bank. When we started the show, it was down by about 200 points. Now it's down by 270 points. So incremental sell-off has led the Nifty a little lower as well. The Sensex has turned into the red. No problems with the broader markets. We are seeing a fair amount of traction in the mid-cap end of things as well. Z Entertainment is one of the stocks that one should keep on their radar. Up around 5%, a big mover that we're seeing this morning itself rather. And a decent traction is what we're seeing on names like Jubilant Foodworks as well as RBL Bank as well. So those are a bunch of stocks which are doing well. What we'll do is we'll wrap up on this edition of Chartbusters for now and leave you with the team of Trading Art to take all the market action.